overcoming objections. Now, let's address the typical objections you're going to get with credit insurance. It costs too much. This can mean a couple of different things. It can mean that the payment is too high, or they think that the price of the insurance is too high. You need to know what the true objection is, because otherwise you might be responding to something and trying to close the customer and or persuade on something that actually wasn't their objection at all. A good way to uncover the true objection is by asking, "What do you mean by that?" Then wait for a response. And they will either tell you, as I suggested earlier, either the payment is too high and or the insurance is not a good value. If they say the payment is too high, respond with something like this: "The actual cost of the credit life insurance by itself is $8 a month. The accident and health insurance is $14 a month. In order to make it easier for you to make your decision, here are a couple of questions that I'd like to ask you and for you to consider. Do you think it would be easier for you to afford that $8 a month on your payment for the life insurance, or for your spouse or your beneficiary to have to pay this entire loan off in the event you passed on?" The other question would it be easier for you to make the $14 a month while you're working, or the $250 payment when you're not? The insurance costs less than $1 a day for both the credit life and disability insurance. But whether you buy both or one or the other, you have to qualify. Would you like to take a look and see if you do? And then take them right to the health question to see if they qualify. Now, a lot of salespeople are apprehensive about the health question. I like to use it to close. It's a perfect opportunity to trial close the customer. It's easier for you to get them to say yes to looking at the health question than agreeing to buy the insurance. Once they look at the health question and they admit they qualify, it's easier to take them smoothly to the close. Well, great. Let's go ahead and print up the paperwork for you. That's a good choice. Let's take a different cost objection, one which they say that they just don't think it's a good value, that credit life insurance isn't a good value. I handle that one of two ways, depending upon their age. If the customer is under 40 years old, I can stress the convenience. I would say to the Mr. and Mrs. Customer, you might be able to buy insurance, another type of insurance, cheaper. I don't know. The price of credit insurance and everything about it is regulated by the State Insurance Commission. Whether you can buy it cheaper is going to depend on the application you fill out, wherever you might go to apply for a policy. Factors such as whether you smoke or not, your age, your sex, and your health history will determine that. All I know for sure is that you can never, ever buy any other type of insurance any more convenient than right now. All you have to do is take a look at the health question. If you qualify, you can sign today with immediate coverage. Would you like to take a look and see if you qualify? How about the person that is over 40? It is very likely they cannot find a better value than credit life and disability insurance. I begin like this. You probably have other forms of insurance, so you obviously see the value of insurance. Let me explain to you how credit life and disability works, and see if maybe you might want to reconsider your decision after getting the facts. Credit life and disability insurance is a group policy. That means that everyone pays the same rate regardless of age, regardless of sex, regardless of whether you smoke or not, and regardless of health history. In this case, everyone is paying the same price for the insurance between the ages of 18 and 65. Are the younger people actually paying for some of the older people? Yes, that's the way it works. So that means that anyone over 45 or 50 would have a difficult time finding a better dollar-for-dollar value than credit life and disability insurance. Before you can purchase it, though, you must qualify. Would you like to take a look and see if you do now? Now again, that's a trial close. If they decide to read it, it's very likely that they'll go ahead with it. So what if their objection is, I just don't need it? Usually you'll get this from a younger person. I ask them, you know, you might not need it today. Let me ask you a question. You have a 5-year loan here. Has a lot happened to you in the last 5 years? Is it safe to say that a lot is likely to occur in your life in the next 5 years? You might be married, you might have children, who knows? What you're doing here is protecting your future. And the worst case scenario is, instead of you're passing a debt to your estate, is you're passing an asset. It's also very convenient to purchase. Would you like to take a look and see if you qualify? And again, trying to get them to the trial close or to the health question. Take another objection. I have plenty of insurance. It could be one of two things, life or accident and health. So you have to first evaluate which one it is by asking, are you talking about life insurance or accident and health insurance through work? In the case of life insurance objection, respond like this. I don't know how much insurance you have, and frankly, it's none of my business. What I can tell you is that when people say they have plenty of life insurance, typically they're talking about $100,000. So let's say you have what the average person has, and you don't insure this loan. If something were to happen to you tomorrow, you would have to pay off this $15,000 loan, or your beneficiary or your spouse would have to pay off this $15,000. So your net remaining insurance would be what? $85,000. In the event that you insure this, you would actually still have your $100,000, but you would also have the $15,000 or $115,000 in life insurance. In the event something would happen, which position would you rather your spouse or your beneficiary be in? The $85,000 or the $115,000? Can we take a look and see if you qualify? Because you have to qualify before you can take the insurance. Now again, we're trying to get them to make a decision. You need to have a writing tablet sitting on your desk so that you can illustrate these closes easily by showing them the difference. In the event of accident and health insurance, the objection, respond like this. I don't know how much accident and health insurance coverage you have through work, but I can tell you what the best policies pay. The best policies pay 70% of a customer's income. So let's just figure your company insurance pays out the best. Based upon your credit application, you make $3,000. Let's take 70% of that. That comes to $2,100. That's what you would get in the event that you were off work due to sickness or an injury. This essentially means that you need to be saving over 30% of your income in order for you not to need the coverage. Right now, you need to be saving 30%. So you'd be getting $2,100 in income again in this situation. If you insure this loan for disability, not only are you getting that $2,100, but you also the $350 protection from insuring the disability, which gives you what? $2,450 in disability insurance in your time of need. Now let me ask you, when you're not working, which position would you rather be in? Can we take a look and see if you qualify? There's a question that you'd have to answer before you can qualify. And then again, do what? Take them to that health question or that closing question. A side note about accident and health insurance. The facts are that most people that you talk to won't have any disability coverage to speak of, or they have a very limited amount. Why is that? Well, it's because it's so expensive for employers, so they don't offer it. So that being the case, most people that you're talking to are severely underinsured when it comes to disability insurance. But they don't know it. That's the unfortunate part. And if you ask them, well, how much does your employer cover? 9 times out of 10, oh, they cover 100%. When 9 times out of 10, they're uninformed. But telling a customer that they're incorrect won't get you the sale.